Hi traders, today's the 28th of July, it's a Friday. As you guys know, yesterday we had a major sell-off from the SPYs and the triple Qs as well as the Dow Jones after an initial gap up. And as you can see, that was on increased volume, both on the triple Qs, the SPY, and even the SPX index had quite a large volume on that sell-off. So quite a lot of clearance that has gone through there, which is definitely bearish, at least from this point of view. However, something to note is we did gap up this morning. If you look at the Nasdaq futures, we are up 1%. So the market will gap up quite a bit, which is really difficult for both bulls and bears to try and judge what the market is. Whenever we do tend to have this sort of behavior, it tends to be an area where we can find chop, for example, for the next couple of weeks. Usually we want the market to flow a bit like this, which we saw earlier, that there's not too many gap downs, gap ups. They've all started continuously, or any gap ups have been around 0.2, 0.3%, which allows money to flow into the market rather than the market opening. For example, if you go to the 5-minute chart, where we have these massive gaps and then we have retests, and now we've gapped up this morning. So, I mean, if we clear levels, if you clear this yesterday's high of around 384, that would be amazing. Maybe we can push through. But do notice we have lots of supply here. You can even see the elevated volume, lots of supply, lots of chop here. So I can imagine this area has quite a lot of resistance. We also noticed yesterday that this 376 level, which has been bounced off so many times, 375.30, and that also bounced yesterday, and it seems that today it's bounced quite majorly with the gap up. So that's definitely an area to look out for, and not to forget this upward moving trend here with the blue line and the 20-day moving average. So these are things to keep in mind. At the moment, we've just got to see what the bulls and the bears, how much each one has, what the strength is. But as you can see, it's sort of whiplash in the market. We're getting gaps going up and then a fade, and again a gap up today. So really interesting movement and something to keep in mind about. It is still an uptrend, but bear in mind we do have quite a lot of sell side volume. The Russell 2000 is similar. I'd say it looks slightly more healthy than the triple Qs, just that we are lingering slightly higher towards its recent highs. As we know, the Dow Jones has had a really great rally during the last couple of weeks. I can imagine this fading now, and maybe the money goes back into tech. So if we look at the semiconductors, is now at, I believe, a near all-time high. Yesterday actually hit all-time highs for a very brief second at around 116.93, and indeed that is all-time highs. I then fell quite sharply on quite raised volume. So today, I believe this level would probably be huge amounts of resistance. If we do break through there, then we're off to the races. This may push even further. But I'd say a good shorting opportunity would be at around 160.77, 160.90. That could be a short-term short. If you look at the energy space, the XLE also was down yesterday, down meaning from where it opened. And I can imagine it retest this 200-day moving average at around 84.65. And if you look at some of the oil names, we're back in this area of demand. This is not exactly what is optimal for bulls. We broke out from this range. But a similar thing happened with JPM, for example, is we had this area of breakout. We did break out, and we then did this sort of bear trap where we crushed through it, and then we pushed through. So maybe a similar thing will happen with Chevron. We may break through here, maybe to around, maybe fill this gap of 158.75, try and clear out, or at least present a bit of a bear trap, and then we could push through finally to this 200-day moving average of 166, 167. So that's something to keep in mind about. If you look at the dollar futures, yesterday was quite a wild day. We had a huge amount of movement, I believe around 2% from top to bottom, from around 133 to 101.60. So about 1.5%. And that is now above the 20-day moving average. We're in lots of area of supply here, so we're just trying to see what the market will do. Considering that this morning it bounced off the 20-day, maybe this can push through again, but do bear in mind there's a lot of supply here. So this could again curl back down, and that would be positive for tech stocks. And something to note also is if we find the ratio between the triple Q and the Dow Jones, that since I'd say the 14th of June, so now just over a month now, the triple Q and the Dow has been almost level. So we're currently, this ratio is at 1.07. We're at the same time on the 30th of May. So the triple Q and the Dow Jones since the 30th of May have outperformed equally. And if we look previously at what happens during this times, we tend to get a consolidation of about a month and then a push through, a downtrend or consolidation for about a month, and then eventually another push through, and maybe we're seeing something similar here. So we may get another push through, especially as we're approaching this 50-day moving average. So that is something to keep in mind, and also that, for example, the Dow Transports has rallied quite a lot through here, and I can imagine this pulls back, and that money may go back into tech. So I'd say keep a neutral stance on the market. Anything can really happen, and follow the price. The bonds have been relatively unchanged, slight increased volatility, but nothing too notable. But the key thing to keep in mind is observe the market. I'd say I'm relatively neutral on the market currently. There's no real setups I'm looking at. If we looked at Deere and Caterpillar, both of these fell quite harshly yesterday. In the tech space, if we looked at Meta, which had earnings the day before and gapped up, we're now testing this previous highs of around 315. I can imagine a slight fade through here. We do have this gap which needs to be cleared. If you look at Google as well, we are now pushing 131. So really a time to observe the market, see who's in control. And if you look at Microsoft is currently settled right below the 50-day moving average. So that could be a potential area to short at around 334.20. But then again, yesterday was on slightly lower volume, which is quite surprising. So it's always to be careful that we are in an uptrend. We are currently still just below the 50-day. So you got to be careful with any shorts. But that's it, and have a good day trading.